Well, Africa's share of global foreign direct investment has grown to 5.6% from 3.2% in 2007, highlighting a growing interest from foreign investors. And joining us for more insight now is Ajahn Sita. He's the CEO for Ernst & Young. Thanks so much, Ajahn, for joining us this afternoon.
Thanks for having me.
Well, we're taking a look at this in a context where we've had conversation time and time again about capital flows outstripping that of aid. Are the scales tipping fast enough in your books?
I think a lot more needs to be done. There's no doubt in our mind that Africa still punches well below its weight in terms of attracting foreign direct investment. If you look at it as an example, Africa as a continent still gets less FDI than sovereign nations like India and China. And if we look at the progress of the last decade, there's no doubt that with real FDI, you grow industries and sectors that create real jobs that are sustainable in the long term and are better than aid.
Talking about the FDI and the way it's changed in its nature over the years, Ajahn, you say there's increasing investment from emerging markets. Do they do things differently to the traditional investors in Africa, i.e. the developed markets?
I think your emerging market investor has a better understanding of the risk profile across Africa, because most of the markets resemble domestic markets of their own. So what we find is that they have either a bigger risk appetite or a better understanding of what the risks are on the ground. When we look at the difference between these two investors, emerging market investors start by looking at the opportunity and then decide how they'll manage the risk. We find that when we talk to mature markets, they start by trying to focus on the risk and miss the opportunity. So in the whole, that is the difference that we are seeing that drives FDI.
Having said that, should we not then be seeing more inter-regional trade? I mean, there's been a focus on that where Africa needs to do business, with each other more so than anything else. So what strides are we making in that regard? So
in fact, Africans are already leading the way. If we look at just foreign direct investment, intra-Africa FDI over the last 5 years is actually up 32%. In fact, it's the biggest growth sector of any source of foreign direct investment. So Africans who are on the ground understand the risk, understand the opportunity, and are demonstrating a commitment to making that investment. What we're not doing enough of, though, is trade, so intra-regional trade. In fact, today, intra-Africa trade is probably around 12-13%. If we look at it, in Asia, it's closer to 35%, and similar numbers in South America. In our view, what we need is two main things. One, greater creation of regional hubs, regional blocks, the likes of East Africa Community, SADC, etc., which needs stronger ties to doing business. And the second is infrastructure. We still don't have enough road, rail, air infrastructure to connect these economies to allow the free movement of goods and labor.
Which is also very interesting when it comes to my next question, because FDI is one thing and it's a very important measure. It shows Africa, attractiveness to overseas investors. Does FDI automatically translate, though, into growth into other areas which some cynics might say are more important? For example, GDP growth, healthcare, education, development of skills, all sorts of things, consumption. Is there a direct link between FDI and all those sorts of things?
So the reason we focus on FDI is that given the different forms of capital, FDI is by nature long-term and is invested into industries that are far more sustainable over the long term. When you look at the last decade as an example, only a third of FDI went into the natural resources sector, so mining, oil and gas, etc. By far, the biggest investments have gone into manufacturing, services, agriculture, and it's those industries that really create the jobs and create the change, whether it's healthcare or education that you were referring to. Mining or natural resource investments, whilst big in capital, actually are not the big job creators that the other industries are. And we see that the other industries are getting the biggest investment.
Yeah, you're making your way down to Cape Town to attend WEF Africa later this week, Ajahn. I mean, what do you make of this year's theme, which is delivering on Africa's promise? Because we've got quite a few factors that need to be dealt with in order to deliver on that overarching big promise.
We like the emphasis on delivery. In fact, when we started the attractiveness survey 2 years ago, we started with the theme of it's time for Africa, because we had a decade of growth. There was a story that needed to be told, and that's being recognized. Last year, we focused on building bridges, which is about creating the infrastructure and regionalization. This year, our own research theme is let's get down to business. Our view is that we need to focus on those companies that are here, the challenges that we have, and we need to start implementing. The story of Africa's growth is now understood. There's a few skeptics, but they're the minority. The promise of growth and the potential is there. Now's the time for execution and not talk.
The World Economic Forum, of course, is going to be about a lot of talk, but behind the scenes, things will be being done. It's not just a talking shop. And I quite like the delivering on Africa's promise theme, because it's almost as though a lot of people are saying, not the skeptics, the Afro-optimists are saying to themselves, we've done the easy bit, the low-hanging fruit has been picked. I hate that phrase, but I have to use it because it's very descriptive. Now we've got the really hard work to do. We've got the challenge, or rather the threats of fluctuating commodity prices. We've got rising inequality. We've got rising youth unemployment. Now's the time to knuckle down and do the really tough stuff.
Well, I think there's a sense of belief now. When people look at the last decade, we've had GDP across Africa triple. In sub-Saharan Africa, it's in fact quadrupled. So there's a belief that there is real growth and that this narrative has held for a sustained period of time. When we look at the outlook going forward, 11 of the 20 fastest growing economies over the next 5 years are in fact going to be in Africa. So there's a recognition that we need to get to the hard work now. Fix the road, rail infrastructure, greater investments into the energy sector, so there's greater levels of electricity supply. It's these things that need to get done to unlock the potential that is actually sitting in Africa.
There's a recognition too, Ajahn, of our vulnerabilities and where we sit in that regard. And with that, strong emphasis being placed on economic diversification, on infrastructure development, as you mentioned a little earlier as well, but also on unlocking talent. And that one of the other sub-themes that's going to be emphasized very clearly. How do you see talent restricting FDI flows?
Well, we just need to look at a few things. By 2030, Africa will have the largest labor force of any market in the world. We know that we will have the youngest population of any market in the world. So there's no doubt that this growth needs to be supported by human capital development and real talent development. So in the short term, many industries might need to attract African diaspora that have returned and bring them back to the continent. We might need to bring expat skills into the continent to unlock skills. But long-term and sustainable growth will only come if we're developing human potential, investing more in education, investing more in skills. The people are there, the investments are needed.
This is how you quite neatly conclude your report, which you kindly sent us this morning, Ajahn. It says, with the critical mass of us pulling in the same direction, and with committed leadership from government, business and civil society, Africa will continue its rise in the decades to come. We've got every chance of doing it, and we've proved that we can do it over the last decade or so. Your optimism is there, obviously.
If you were sitting across the table with any of the finance ministers out of the mature markets and you ask them what would they wish for today, they'd be saying to you they'd wish for a market that gave you GDP growth of 5-6%. They'd be saying to you they want a stable inflation environment. They'd be saying to you they want a young population that has growth potential. If you look across Africa, that's what we have. A finance minister's dream. It's really up to us to make sure we translate that potential into real value.